It is now time for Futures in Focus. Joining us from the CME is Bill Baruch, president of Blue Line Futures. Bill, obviously we had severe weather events over the weekend. They haven't seemed to have affected oil prices too much. What are you saying down at the CME as to why that is?
You know, overall, I am a little surprised that we're not seeing a little bit of premium come out of the market, but at the same time, we didn't see a lot of premium come in on Friday. You know, the EIA data has been driving this market higher, as well as just overall, the OPEC, the tailwinds coming from the OPEC cuts, extending those. But what we're also seeing is a very good technical landscape, and pullbacks are just getting bought up. In fact, we're advising clients to be a buyer until you see a close below $59. And then if you look at last week's spike higher, we're seeing a very constructive bull flag pattern develop. And I think the path of least resistance, unless we see it close below $59, the path of least resistance is going to be up to $62.50, where you have a trend line going from last year's high. At that point, we'll be at a more of an inflection point. Is this going to be a bull market run, or are we going to fall back from there?
Bill, who's in the market? I was reading this morning that hedge funds haven't been this indifferent to crude in 6 years. It's been since 2013 that we've seen this few combined bets on WTI rising or falling.
Well, we've been fairly range-bound. Yes, it's been a very large range, and there's been a lot of volatility, but there hasn't been a definitive move out higher. I mean, looking back to last year, yes, that happened there, but since that fallout in October, we've been very range-bound. It's been a $20 range, yes, but as we consolidate, there's a lot of trading opportunities, but we need to break out of that range, broadly speaking, in order to gather more bets on either side of this trade.
What are the rumblings on tensions between the U.S. and Iran? Are they still playing a role in this market, or do we need another catalyst for them to impact trading?
I think there is a bid under the market because of Iran, but ultimately I do think it's sort of taking a back seat at the moment. Looking into the weekend, we did not pick up any premium. Again, there was the tropical storm Barry, as well as just Iran in the headlines, and there's been shots higher because of those headlines, but we're not getting follow through. We're not seeing the next escalation. In fact, Europe is meeting today in Brussels to discuss the nuclear deal. We'll start to hear more out from there. UK and Iran did speak on the sidelines going over the weekend or through last week, and we'll start to see more developments. Yes, Iran wants to talk if the U.S. removes those sanctions, but I don't really see that happening. And this situation is going to continue to drag out, and it's going to continue to keep overall support in the market. But it's also going to be a potential move higher, where it can really bring a good tailwind, and those are going to keep the buyers interested.
All right, Bill, thank you. That is Bill Baruch of Blue Line Futures for us at the CME this Monday.